Hey guys, so the next coin I want to take a look at is called Kaspa. I don't know if I'm saying that right, but the ticker for this is KAS. It was somebody suggested that I take a look at it, so yeah, that's what I'm gonna do. This one's kind of unique compared to a lot of the other coins that I've looked at. As you can see, we are right near the all-time high right now. So we came up, and we were just doing a little bit of a pullback here. So that's interesting. This one's a lot further along than a lot of the other ones. So right now I'm on the weekly time frame. The one thing I should point out, right now we're not really sure how this pattern is going to play out. It can either be a double top or an ascending triangle. So as of right now, let's just assume that the ascending triangle is going to play out because we haven't broken it yet, right? One thing that's a little bit concerning is we kind of have like this double top, but the oscillator is showing a lower high, right? So that's like an early sign of weakness right there. This still looks good, but let's move this down to a smaller time frame. Actually, I'll show you this chart, and I'll show you the potential ascending triangle. So if you're not aware of it, an ascending triangle is a bullish chart formation, so it just looks like this. So you have the flat resistance, then a rising lower trendline support, and then the price kind of just bounces around in there until ultimately it'll choose a direction to break out of, and more often than not, this particular pattern breaks to the upside. So that's what I'm seeing on here. So I drew two trend lines on the lower portion of this. So obviously you have this horizontal line across the tops. That's pretty self-explanatory. But then I have this one up here because we have one, two, three. This is three touches already, and it's a valid trend line. So obviously, if the price comes back here, this is a level that you'd want to. If it comes back here, this is a level that would a lot of buyers, I imagine, will step in. And now it can be drawn like. Keep in mind, there's traders that are going to be drawing it from the wicks, and there's traders that are going to be drawing it from the candle bodies. So just keep that in mind. For now, I'm just going to draw the wick, and because the wick is what lines up with this level right here. So when you're looking for potential levels of support and resistance, it's good to look for confluence. So if I just draw a horizontal line right here, this level has a lot of confluence right here. So you see how we have the upsloping level of support. Kind of like converging right here with this horizontal level of potential support. So if the price comes back here, that's obviously a very strong potential support area, but not saying it's going to come there. Okay, so if this breaks, then the next major you'd have a potential support area right here. So I'll just draw horizontal line. So you have these two tops right here. So as you can see, it was support right here, it was resistance right here, resistance. And so yeah, obviously if the price breaks down here, you can look to this area as well for potential support. And then if that breaks, then obviously you have this larger uptrending support line, right? So that would be like your lower range of this potential ascending triangle pattern, right? And this is a daily time frame, so obviously this could take a while to play out, right? Each one of these candles is a day. So, I mean, by the time it gets down here, if it gets down there, yeah, it could be a while. I mean, right now, this level right here, like you can have a support level as high as right here. You see, where is it? Right here. So you see this level right here. So this was support right here. And when we broke that, it flipped to resistance. And then we ended up breaking up through here, but we had this wick down, right, like this candle here. The price came down, and we had a lot of buying pressure coming right here. So if the price comes down there again, I imagine buyers are going to step in to defend that level once again. Okay, so yeah, it could be a double top or it could be an ascending triangle. That we are not sure yet. Okay, so I'm going to take this down to a lower time frame and just take a look if there's any trade opportunities that we can look for on a just, like a quick get in, get out kind of scenario. Okay, so you see here, this is obviously a valid trend line. We have multiple touches, so this is a resistance level. So if the price comes back here, expect this to act as a level of resistance. You could, take a low risk short right here, where you enter and then place your stop loss just above. So just to give you an idea of what that would look like. And if you love this coin, don't get mad that I'm saying get shorted. This is just about, short-term trades. Maybe, I don't know much about this coin. If this is a really strong coin fundamentally, just maybe leave a comment and tell us why you believe in it, right? Okay, so you could just enter a short there, or I mean, not financial advice, but yeah. And then you could just target this lower region. So as you see, I have these levels right here. I don't know if it shows up very well, but this right here is the previous day high. Here, I'll just mark that for you so you can get a better look. So horizontal line at the previous day high. and I'll do another horizontal line showing the previous day low. So right here in this range, so right here, so you have this downsloping level of resistance. One could enter a potential short right there, place a stop loss just above, and then target this lower range. So this potential trade would give you a risk reward ratio of 1 to 6.19. So that means for every $1 you risk, you could potentially get $6.19 in return. So these are the kind of trade setups that I like to take. And I like this also because I only have to risk less than 1%, so 0.87% to potentially gain 5.37%. And of course, that could be amplified a little bit with leverage. Now, if I'll just extend this line out, and if, for example, the price breaks above here, then the next level of a potential short opportunity could be right here, and that would look somewhat like this. So obviously, don't just short based on this level. You kind of want to look for specific kind of candle. So you want like a doji and then maybe like a more bearish looking candle to enter the short. But let's say theoretically you were to enter right here, then you place your stop loss just above this level of resistance, and then I would personally target the this downsloping resistance level, which I would anticipate to be flipped to support. You know what? I do it to the top of right here. So let's just say I did that. That would give me a risk reward ratio of 1 to 2.74. So I'd risk a little over 1%. Sorry, I'd risk a little over 1% to potentially get 3%. So yeah, that's a good trade setup. And then obviously, I mean, if the price, it works the same way on the long side, right? So for example, if the price is able to get above this region here that I have marked, then obviously you can enter a long position with a stop loss just under here and target this upper range. So let me just see theoretically what would that look like if we did that. So let's just say, yeah, we get above, where's that resistance level? Oh, right here, yeah. Okay, so let's just say we're able to break above this level of resistance. I would personally base this trade on the way that the daily candle closes. So if we took a long position right there, right here, and we place our stop loss just below, and then we target this upper region, the previous high here, that would give us a risk reward ratio of about 1 to 3. We would risk 2.86% to potentially get 8.84% to the upside. So that's another potential trade that you can take. Okay, so yeah, to recap, we don't know if it's going to be a double top or this is just forming a bullish ascending triangle formation. Here are your levels you can look to. Just basically trade within the ranges. You know, I don't know where the price is going to go. You know, you got to keep in mind that when you see these YouTubers and they say, oh, it's going to this price or whatever, they don't know. They're just trying to get you to click. Like, it's just clickbait, right? If you're trading, just draw your levels, and then the price is just going to bounce between the levels, and then it's up to you as the trader to just try to take like a low risk entry, and then you just want to find like trades that give you a good risk reward. So I don't know what's going to happen here, but whether it's to the upside or the long side, or sorry, the downside or the long side, I can still find good trade setups that I can take within this range. I'm not really emotionally attached to any of these altcoins. So, okay, so what if it breaks out here, right? Like say we just kind of range here for a bit and it breaks out. Well, then it's just open air, right? Like maybe it'll break out, and then you could normally, more often than not, when it breaks out, it'll kind of come back and it'll tend to retest this previous resistance level. And that's when I like to get in. Like I will personally wait for, maybe a reversal candle like a doji or something. And then it'll be like the next candle, if it's a bullish candle, like a bullish engulfing candle, that's when I would look to get in, and I would place a stop loss just below the previous all-time high. So I would anticipate this resistance to be flipped to support. As for what your potential targets are in that case, a lot of people will use like Fibonacci extensions. So for example, they would take like a trend-based Fib extension right here. They would draw from this swing low up to the high and then back down to the low. And then that would give you like projections, right? So they would target the 1.618 right here, or they target up here at the 2.618. So that would be around a little over 10 cents. So I mean, that would be a pretty big move from where we're at right now. Oh, over 100% move. But yeah, when we're in kind of like this uncharted territory. So yeah, I like to just trade based on price action. I'll keep in mind where the targets are, but I'm mainly looking at the candles and just the structure of the price in that scenario. A lot of people will draw the Fibonacci extensions using the trend based one, but some will also just use the regular Fib retracement, and they'll just take it from the top down to the bottom, and that will run a projection as well. and that will give them these levels. So for example, the 1.618 on this one would be around 9 cents, and then even higher than that would be the 2.618 here, and that would be a massive, that would be 32 cents. So just be cognizant of where these levels are, but I'm personally just looking at the price action. So, and what I mean by that here, I'll just give you an example. Let's say, was it geometric shape? So basically the price just moves and it kind of stair steps its way up. It works in waves. So if the price comes up here, I'm here, and I'll go down and I'll go up and I'll go down. I'll just look for like a kind of like a price structure where if the price, so for example, if I bought here, right? I would because this is a previous level of resistance, that would be here. I'll show you here. Can I do a horizontal line? Here we go. So if we had this kind of scenario where the price came up and then came back down, I would, on the way up, this level here, the previous high would be a resistance level. But once we break that, then this previous high for me becomes a support, right? So I would, hopefully the price came down here, I could look to enter a long position. So for example, I would enter a long position, say if I entered right here, if I just call it, and then I would just place my stop loss just below the previous high here, which I'm anticipating to serve as a support. And, the price could come all the way up, but I have no idea where it's going to go, right? If there's a fib extension around there, maybe I'll try and go for it. But normally I'm very conservative, so I'm just going to assume that if we're starting to see like reversal candles at the previous high here, I'm just targeting the previous high, so I'll just go for this. So in this scenario, they would give me a risk-reward ratio of almost 1 to 5. This is the weekly time frame, so these numbers are pretty high. I don't really want to risk 15% on a trade, but just as an example, I would risk 15% to get 74% on a move like that. So yeah, when we're kind of in open air, I just look at the price action. I'm aware of the Fibonacci extensions, but yeah, I'm just basically trading pullbacks and to previous levels of resistance, and then when we're really up there, I'll start looking at the oscillators to look for like a sign of divergence or something like that. But yeah. So this is, what's this called? Kaspa? Am I saying it right? If I'm saying it wrong, let me know in the comments. But yeah, overall, it looks good. I mean, maybe we're going to come down here. No guarantees. But anyway, you have your levels of support and resistance. So anyway, hopefully that helps. And if you're not subscribed and you found this useful and you want more videos like this in the future, I'm going to be doing about 2 or 3 videos every single day. Just subscribe. And when you do, hit the bell and then click on all, because this is a very new channel, a very small channel. And once you click away, if you're not subscribed, it might be hard for you to find this channel again in the future. All right. So yeah, hopefully that helped. Take care. Have a good evening. Bye.